All right. Hello, everyone. Welcome to our Solving the Mystery of Credit Reports webinar presented by Clark County Credit Union. We ask that you stay muted during this webinar. If you have any questions, please put them in our chat and they will be answered at the end of the presentation. Today's hosts will be Crystal Price, our Director of Marketing, and Craig Fraley, our Craig Fraley, our Director of Business Development. Crystal, take it away.
Thanks, Brittany. And just a shout out to you, Brittany Ray. She's the creative director for Clark County Credit Union. She put the slides together and is doing all of the hosting for this program tonight. Like she said, my name is Crystal Price, and working in the credit union industry for over 18 years. Financial education, financial literacy is something that myself and Craig are really passionate about. So we're excited to share this presentation with you tonight. Craig, go ahead and get us started.
Good evening, everybody. Thank you for logging in. My name is Craig Fraley, and I've been with the credit union now for 28 years this year. Several of those years I was a loan officer, so I've looked at thousands of credit reports. So this is something that I love to talk about. Tonight, we're going to take all the mystery away from credit scores and credit reports. At the end of this evening, you will know what makes up a credit score. How can you protect your credit score? How can you enhance it? If you're just starting out, how can you establish your credit? If you damage your credit, how can you reestablish credit? What do you do if you find something inaccurate on your credit report? What if you are a victim of identity theft? What can you do as it pertains to your credit reports? We're going to go over all of this. Again, all questions will be answered at the end because most questions will probably be answered by the material that we're about to cover. And can we go to slide 2, please? There are 3 major credit bureaus in the United States, and almost every single adult in the US has a file with at least one, if not all 3 of these credit bureaus. They are Equifax, Experian, and TransUnion. They gather information from a variety of sources. They get them from banks, from credit unions, from retail establishments. They also get them from court records. They search courts for lawsuits and judgments and liens and bankruptcies, and they compile all of this public and credit data together in one place, and this forms your credit report. They then share this credit report with those people who have a right to know, which is people you have given permission to look at your credit. Now, not all creditors report to the credit bureaus. If you're making monthly on-time payments every month to a creditor, and you find when you're looking at your credit report that they're not reporting it, you want to ask them to report that to the credit bureaus, because those monthly on-time payments are what are actually building your credit. And if you're making payments and they're not reporting it, it's not helping you. Now, the credit bureaus are all regulated by the Consumer Financial Bureau, and we'll go to the next slide, please. And they have to abide by what's called the Fair Credit Reporting Act. This law was designed to promote accuracy, fairness, and privacy of information on every file for every consumer in the credit bureaus. Now, you may access your own files, and you can do this once a year for free by getting a credit report from all 3 credit bureaus, and we highly recommend that you do this. You want to examine those credit reports carefully to make sure that all the information is yours and that all the information is accurate. If you find something on your credit report that is inaccurate, you can dispute that with the credit bureaus. I'll give an example here. We're going to pick on Kohl's just to pick on somebody tonight. So you have a credit card charge account with Kohl's, and they're reporting to the credit bureaus you are more than 30 days past due, but you've got a statement that shows you've never been past due. In fact, that's been paid off. You can dispute this with the credit bureaus. The fastest way is to use their online dispute form at the credit bureaus. They must investigate this within 30 days. You give them a copy of your statement that you have from Kohl's. They will then go to the original source. They'll go to Kohl's and say, hey, this consumer says that their account's fine. They gave us this information. Kohl's will then investigate it. They will see, oh yeah, that information is inaccurate. Now the credit bureau just verified they have inaccurate negative data on your credit report. They must remove it. They must also notify you in writing that they've done so. This is why it's so important to look over your credit reports to make sure that everything on there is current and it's accurate. Outdated information must be removed. Now, positive information on your credit report can stay there indefinitely, which you want it to. You want all your great credit, all those on-time payments, you want those to always be there and be visible. Negative information, such as if you're showing you had 30 days, 60 days, 90 days past due, if you've had a bankruptcy, if you had a collection, that information will typically be on your credit report for 7 years, and then it will drop off. But let's say that you're looking at your credit report and you had a 90-day past due and it was back in 2000, and for some reason it hasn't come off yet, notify the credit bureaus. They must remove that because it is outdated information. Access to your file is limited. So you can pull your own credit report and look at it, and you should. And anybody you give permission to, your neighbor can't pull credit, a family member can't, somebody just being nosy cannot pull your credit. Only the people you give them permission. So you're applying for a loan, of course, they're going to pull your credit. In some cases, employers want to pull your credit. You will sign a waiver giving them permission to look at your credit. Same for insurance. When you're applying for insurance, they may want to look at your credit. Again, you'll sign a waiver. Landlords, some of those want to look at your credit. Again, you'll give them permission to do so. And if somebody uses information against you, they have to tell you. So for example, you apply for a loan at a credit union or a bank and they deny you. They must tell you the name, the address, and the phone number of the credit bureau that they used to deny you that loan. Crystal reminded me of something yesterday on this. They will also tell you why you were denied. So if your credit shows you have too much unsecured debt, maybe there's some negative information on there, a collection, a charge off, something that's hurting your credit, and they'll talk to you about what you can do to help fix that so that you can get a loan approved in the future. But whoever denied you any action, this is the same as if you're applying for a job and they deny you the job based on your credit. They must tell you what credit bureaus they used to use that information against you. All right, we're going to go over to Crystal for the next slide.
Right. So in this slide, we're going to talk about what you need to do in order to obtain your credit report. So like Craig said, there are 3 credit bureaus. Once you get the handout from us, I do want to also remind you all, after today's presentation, you guys will all get a handout that has all this information on here. So going forward, and some of the information talked about before, there'll be like a lot of details with dates and addresses and things like that. It will all be in your handout, so don't worry about not having that information with you at this moment. In the handout, there will be the address of the 3 credit bureaus. So if you wanted to obtain one, you're able to get one free per year due to the FACT Act. You can either contact them directly and get the report that way, or you can go online and go to www.annualcreditreport.com and request it that way, and they'll be able to pull all 3 at one time for you. Again, this is free once per year for all of the credit bureaus, however you decide to do it. There are some companies that offer to pull your credit. Usually there's a charge though, so just be leery of those. You are able to get that free one, so I would definitely utilize that at least once per year to get that credit report and make sure that the information that's being reported is accurate. Next slide, please. So we're going to go over the sections of the credit report. Each 3 of the bureaus will report them differently. They'll look a little bit different, but all of the information will be the same on all of them. They're going to each have these 4 sections. So the first one is the identification section, which has your name, date of birth, social security number, and your address. I think a lot of times people will overlook this section just because it's so basic, but you really want to make sure that everything on this area is up to date, especially your address. I've had this myself happen where an address was being reported that I lived at 3 years ago, and then when I was trying to buy a house, I had to write like a statement of explanation of, you know, why the address didn't match up. It wasn't all of the bureaus, it was just the one. So little things like that can hold up the process when you're trying to get a home, things like that. So make sure when you do pull your credit report, you're checking all the information, including the address, that the address reported is up to date and current. The next item are your public records. So those are things like bankruptcy, judgments, and liens. It will tell when they actually were granted by the courts, so the date that they were approved, whether it's been paid off, if it's been fulfilled, or if there's still something that's being owed, or whether payments are on time. So you want to make sure that that information is up to date. If you did have a bankruptcy or a judgment, something that you've taken care of, make sure that it has been satisfied on the credit report as well, so that you don't get any negative credit responses if something isn't current and up to date. And then your accounts, those are also known as your trade lines. So that reflects your payment history, your balances, and the dates that any loans like a credit card, auto loan, things like that, all of those will be in the account section. Again, this is very important to make sure that you have the full payment history being reflected on the credit report. An example would be having a credit card that you opened up 15 years ago, but you're only getting credit for 1 year's worth of credit. The longer that you have open trade lines, the better you're going to get a credit score, the higher points that you will receive for having longer credit open. So you want to make sure that you're getting full credit for the length of the time that your account was opened. Same thing goes with balances, especially credit cards. If you have a credit card and at one point you did get the credit limit near the max, but it's been several months and your credit limit is back down, you want to make sure that you're getting credit for having a low utilization, because that will help you to achieve a better credit score. And then the last section are the inquiries. And these are things like when you go into Kohl's and they offer you a credit card, and maybe they offer to give you a 15% discount. You want to be careful on those because those can also affect your credit score. So unless you're planning to go out and actually get a card for a department store, don't apply. Don't be tempted by the special offers, because those things can add up and reduce your score. Even if you get a denial, it's still going to get you a negative impact on your credit score. Some exceptions to the inquiries would be if you are shopping for an auto loan or shopping for a home loan, because lenders expect you to shop around and get your credit pulled at more than one lender within a specific period of time. So usually there's like a 2-week window where you can do multiple inquiries for something like an auto loan or a home loan, and it'll be kind of that exception. But if it looks like you're continually trying to get a credit card here, trying to get a charge card here, it can appear that you are desperate for credit, and it can affect your approval and then also your credit score negatively. Out of these 4 sections, there's only one of them that could not affect the approval of a loan, and that is your identification. So nobody can base a loan decision on your name, your date of birth, your social security number, or the address or your location of residency. Next slide, please. So next, we'll talk a little bit deeper on your trade lines. So again, those are your auto loans, credit cards, lines of credits, anything that is revolving and is going to show your monthly payment. On your trade lines, it will report the creditor's name and a partial account number. For those of us here at the credit union, we're pretty familiar, we might have a membership number, and then underneath that membership, there's several different suffixes. So you might have a suffix for your credit card that's different from the suffix from your auto loan. So you want to make sure that that partial account number reflects the accurate loan, and then it also reflects these other items as being true and up to date. Including your date the account was opened, which we covered before. You want to make sure you're getting full credit for the time that you opened that trade line. You want to check to make sure that your payment history is on time as well. If you have anything that's delinquent, that will also report on your credit reports, as well as charge-offs. One thing that I've learned since working with the financial industry is that credit reports each have a section where they report your negative delinquent payments. So it'll show how many 30-day lates you've had, how many 60 days, how many 90 days. So those things actually do stand out. You want to make sure as much as possible to keep your on-time payments accurate, because those delinquent areas will stand out to a lender who's trying to make a decision on a loan. You also want to check your date of last activity. This one is another one that can be important, especially if you are dealing with sometimes smaller creditors. Sometimes they don't report monthly. So even though here we are in January, you've been making your payments on time, but if you pull your credit report, you might notice that the last time that they reported was in December or in October even, several months previous. So you want to make sure that information is up to date. If you do see something that's not showing a current time of January and it's showing something like in October, you want to contact them and say, hey, I've paid October, November, December, January. Please reflect that on my credit report so I can get the proper credit that I deserve for my credit payment history. You also want to check your current balances. Again, this is great for your revolving lines of credit, things like that, making sure that you're showing hopefully a good unsecured amount that's available. It'll also show whether or not you have joint or individual accounts. So if you have an auto loan and maybe you're a joint on that loan, that will show up as well, whether it's a joint account or it's an individual account. It'll also show the current status. So that's whether it's on time, if it's 30 days, 60 days, etc., and your credit limits. Again, for utilization, this is very important to make sure if any of you have had a credit line increase. Maybe you had a credit line that was 3,000 and you recently had an increase that shows that you are now at 10,000. You want to make sure that that reports accurately on your credit report so that your utilization percentage is lowered. Next slide, please.
All right, we're going to go over what a credit score is and how credit scores are formed. First, I want to say that there's going to be a couple of items tonight that are probably going to be repeated because it goes into multiple categories and it's all very important for the welfare of your credit report. I'm going to go over just a couple of things first that do not affect your credit score at all. And that is your income, your employment history, your race, religion, national origin, gender, marital status, and age are not factors in your credit score. And as Crystal said, shopping for a car or a home, it will not affect your credit score in the following way. If you, your first inquiry, so the first car dealership you visit, that's one inquiry on your credit report, that does affect your credit. But if you go to 6 other car dealerships within a 14-day window, those other 6 do not affect your credit score. Same with mortgages because they know you're shopping for the best rate. Now, a company called Fair Isaac and Company came up with a scoring system that they use for credit reports, and they came up with what's called a FICO score. And that's your credit score. And it goes anywhere from the low 300 to the high 850. The higher the score, the better. The higher the score means you're less of a risk to a creditor when you're asking to borrow money. It also means you're going to pay a lower interest rate when you do get approved for a loan. Now, the 3 credit bureaus will have 3 different scores because of how they collect the data, how they store it, how they calculate it. They're going to be close, but they'll be different. And a lot of lenders will pull from all 3 credit bureaus. So for example, you may have one credit bureau, your score might be 820. Another one will show 800. One may show 790. Now, when they're looking to approve you for a loan, they will always look at the totality of your credit report to base a decision on whether you're going to be approved or not. But your credit score determines the pricing of the loan. And they will always use the lowest of the 3 scores to price your loan, which is why it's so important that your payments are made on time every month and keep your credit in good standing so that even that lowest score will still be a high score. So what actually goes into making up your score? The most important category is payment history. That equals 35% of your credit score. You don't want to make any late payments because that will bring your score down. Look at it, picture it like this. Each time you make a monthly payment, it's like building a staircase up to a higher credit score. And if you have a delinquent, then you slide down. So now you're going down 5 steps trying to gain back to it. And the only way to improve that is by monthly on-time payments. It's probably the most important category in building a credit score. The amount you owe equals 30% of your score. What they're talking about here is they don't want to see that you're maxed out on your credit cards. So if you have a credit card and it's got a $10,000 limit and you're always at $9,000, even if you've never been late on a payment, you've never missed a payment, but you're always around $9,000, you're almost maxed out, this will prevent you from getting a higher credit score. It looks like you're living beyond your means. If something unforeseen should happen, you may have to borrow more money to go in more debt to help you get through it because you have no wiggle room on there. So a good rule of thumb, keep your balances between 30 and 50% of what the limits are. And you want to do that whenever you can. The length of credit history is 15% of your score. How long have you been in the credit bureau? This can positively impact your score. The longer you're in there with positive credit, the more it improves your score. So for example, you opened a credit card 20 years ago. That's your first trade line. Now, no matter how many you've opened since, whenever somebody pulls your credit, their history will always go back to your oldest trade line, in this case, 20 years. So it goes back that far. So you want to keep your oldest accounts in good standing and keep them open so they have that much information to base a decision on when they're approving a loan. If you were to close out that 20-year trade line and the next new one you had was a year old, your credit history will go back 1 year. And it may not give them enough history to make that decision. So keep your oldest trade lines open. New credit is 20% of your score. New credit is, for example, we talked about this before, you go into a department store, they offer you a credit card to get a better deal on what you're buying. If you take that, that's an inquiry and that's new credit. You get a pre-approved credit card in the mail and you go, oh, I like this card. You take that card, that's a new inquiry and that's new credit on your credit report. You go into your bank and they tell you, hey, you know what, take our card, it's got a great reward program. You go, well, I like that. So you take that, again, that's another inquiry and more new credit. Too many of those in a short amount of time will damage your credit score. and hurt you when you want to go borrow money you actually need, because it'll look like you have too much money. For example, if you have, you know, 6 or 7 credit cards, and even if you owe nothing on them, that will still hurt your chances of getting another loan, because you have the potential to overnight charge all of those cards up, and suddenly you're in a lot of debt. So when a lender is looking to make a decision, they're going to approve you for a loan, and it will show on the credit report what is your limit. It'll show what your balance is, but it will tell them what your limit is. If you have a $20,000 limit, the creditor has to assume you have $20,000 worth of debt, because overnight you can charge it up to that. Types of credit used as 10% of your score. Now, this means that you want to have various types of debt so that lenders can see that you can handle various types of responsibilities that come with those debts. So when they pull your credit report, they want to see a good length of history, and they want to see a variety of debt. They don't want to see just credit cards. They want to see a home loan, a car loan, a personal loan, maybe a student loan, and then you have a credit card. So all of those things make up a good, healthy credit report. And next slide, please. So how do you improve your credit score? How do you get that score to go higher? Again, this is some information we're going to go over. We're going to go over some of this information more than once because it's very important. The number one way to improve your credit score to get a higher rate is to make those monthly on-time payments. It's those building blocks that build up a credit score. Nothing else does that. Monthly on-time payments. Keep your balances significantly lower than the limit. Good rule, between 30 and 50% of what the limit is. So you want to really live within your means here when you're using credit cards. If you have too much unsecured debt, that can really hurt you in getting a loan, and it will definitely prevent you from getting a higher credit score. Keep your oldest accounts open, just like we just talked about. You have that 20-year-old account. Keep that in good standing so they can go all the way back 20 years and look at that great credit history. Now, they're not going to see 20 years of payments. That would take up, a block worth of paper. What they'll typically see is 24 months of activity, of on-time payments. But it will show them that account was open 20 years ago. So your credit history goes back that far. You want to diversify your types of accounts. Again, we talked about that. You want to have more than just credit cards, car loans, home loans, personal loans, student loans. Then you can have a credit card loan on there. So diversify, give you a good, healthy credit report. Limit the number of credit applications made. Too many inquiries in a short amount of time can drop your credit score and prevent you from getting a new loan. So a rule of thumb here, only apply for the loans that you actually will use and you actually need. Don't fall for all of the pre-approved offers and all of the gimmicks where they're going to give it 10 or 20% off of purchase. All those things put together and you add them up, that can damage your credit. And let's see here, let's go to, not yet. Okay, now let's say that you're brand new and you want to buy a car, but you've never had credit before. You're brand new to the credit world. Or you've damaged your credit and nobody's willing to take a chance on you and they're not going to approve you for a loan. How can you get that loan? One way is to do what's called a cosign loan. Now, what you would do there is you would find somebody you know that has good credit that is willing to cosign for you. When they go to look at approving this loan, they are going to approve the loan based on the strength of your cosigner who has the good credit. They're going to price the loan based on you, and if you have damaged credit or no credit, you're probably going to pay a higher rate. But if you get approved for this loan with the cosigner, make your monthly payments on time, over time, you will be able to apply to have that loan in your name only and possibly get a better interest rate. But there's a double-edged sword with this. You want to be very careful if you go down with a cosigner, because if you fail to make your payments on time, it will not just damage your credit, you will damage the credit of your cosigner. And your cosigner has already done you a great favor by co-signing a loan for you. You do not want to give them the disservice of damaging their credit by not making your payments on time or defaulting on that loan. So you want to be careful there. Another way to establish credit, if you're trying to reestablish your credit, is what's called a secured loan. And the way that works is you typically say, an example, you have $1,000, you put it in your savings account, the financial institution will place a hold on that money. They will then issue you a credit card with a $1,000 limit. Now, what you don't want to do is to run out and charge that up to $1,000. Remember, don't max it out. You want to keep it between 30 and 50% of the balance. So you say you charge $500 on it. Now you make your monthly on-time payment every month. Remember that building block, those monthly on-time payments. It's what's building a credit score. If even, let's say next payday, you go, I can just pay that off. Don't do that, because just paying it off, it's like a flat line. It doesn't improve your credit at all. What you're using this secured credit card for, it's a tool to help you build your credit. So and every time you make your payment, what you owe comes down. Your credit's going up, and what you owe comes down. You get down to almost nothing, charge it up 500 again, keep doing that. Keep making your monthly on-time payment, and that process is gradually building up good credit and a better credit score for you. Over a period of time, you can apply to have that unsecured. The financial institution, if they approve that, they will take the hold off the $1,000, so that's yours to use, and they will issue a credit card with a limit they're comfortable with. And then again, just follow all the good rules of credit when you get that unsecured credit card. Keep it between 30 and 50% of the limit and make your payments on time every month. All right, now we're going to go to the next screen. How long does this information stay on your credit report? Well, the good news is that positive credit stays on there indefinitely, which is great. So when you make those monthly on-time payments, you pay off a loan successfully. Creditors can see that always, that you have this great credit history. But let's talk about the negative credit that happens. Let's say you have 30 days, 60 days, 90 days past due. You've had collections, you've had a bankruptcy, and this would be a Chapter 13 bankruptcy. This information is going to stay on your credit report for 7 years. And there is no way that you can get accurate negative data removed from your credit report. Only time can do that. And so remember, this is the credit that you've earned. And if you've honestly earned this, this is what people are going to see when they pull your credit report. So this is why it's so important to keep your monthly payments on time every month. Avoid having anything go into collections. But if you do have some of those things go there, it's going to be on there for 7 years. All right, and that includes collections, which is at the bottom of the slide. That'll be 7 years as well. All right, let's go to the next slide, which we'll go over to Crystal.
Great. So now we're going to talk about what happens if you find an inaccuracy on your credit report. What do you do to resolve it? There's 3 things that you can do. First is you can go online and fill out a dispute form through the credit bureaus and report the inaccurate information. The next thing you could possibly do is send a certified letter to the credit bureaus. Make sure you get a copy of everything that you send out. And then the third way is, if the first 2 don't go through, is use a 100-word statement to explain a little bit further in detail what has happened with the dispute, to kind of really plead your case of why it should be removed. The credit bureaus have 30 days to respond to it. Usually they're pretty fast with it. If they don't respond within the 30 days, then your dispute is granted in your favor. The most effective way, though, the fastest way to get disputes done are by going through the website, and it's a really easy process to do. The bureaus have really nailed it down, where you just fill in the blank pretty much to get it done. So yeah, that's probably the fastest way. But if you don't feel comfortable, definitely do a certified mail, make copies, and then again, if any of that fails, then do the 100-word statement to really provide additional details that maybe you couldn't provide in the other information that was sent over. Next slide, please. So a lot of people nowadays claim to be credit repair specialists. You might see them on social media. You might see billboards, flyers, and things like that around town. You want to really beware of people claiming to repair your credit, especially for a cost. Most of them are really expensive, maybe $300, and you're guaranteed to have an 800 credit score. It's unrealistic, and the majority of the items that the person who says that they can repair your credit, that they claim to do, you can do those things yourself for free. First being pulling your credit report. A lot of times people will charge you, an upfront fee, 20, 25 bucks just to pull your credit, where you can go on and get that for yourself for free. A lot of times we've seen cases where company will engage in illegal activity to try and get a better credit score for you. Sometimes they may apply for a secondary social security number. You are issued one social security number and you can only have one. So when they apply for a secondary one, that's an illegal activity. and that's not something that should be done. So be wary of those cases. Another thing that we've noticed is that they will try to dispute items that are legitimately negative on your credit report. So if something has gone into collections and it really is a debt that you owe, you cannot dispute those items. You can only dispute inaccurate negative items. So if anybody promises that they can get rid of, maybe you had a period of time where maybe you had a lot of hospital bills and things like that, and they've gone into collections, and a company claims that they can remove those. That is inaccurate. They can't do that, but at the same time, they will take your money. So be cautious of that. Anything on your credit report that is inaccurate, you can do yourself for free. You may need a little bit of guidance. We're hoping that tonight's presentation will give you with all the tools that you'll be able to go back and use yourself if you are in any of these scenarios. But definitely take the steps yourself to resolve any inaccurate information on there. Do it the free route. It may take a little time, a little pen and paper, but you can do it. Next slide, please. So another area is identity theft. So this is the inaccurate information that is on your credit report without your knowledge, right? Maybe you lose your wallet and somebody finds it, and next thing you know, there's like a mysterious credit card in your name. So this is another reason why it's so very important to make sure you check your credit report at least once per year. Fraudsters, scammers the numbers are higher than ever before. People are getting smarter, with technology and things like that, finding new ways to obtain your information. There's a couple of different ways you can protect yourself, protecting your information. The very main one, I know a lot of times people are like, don't leave your belongings in your car, don't leave like laptops and cell phones, things like that. But you also want to consider your mail. Don't leave pieces of mail in your card, because that can have information like credit card numbers, your monthly bank statements, and from that they can determine whether or not you are a good victim for them to pursue. So make sure your information is safe. Your wallets, don't keep your social security card. I know that's something that people say all the time, but once you lose your wallet, if your social's in there and they have your ID, that's open season for them to apply for new credit. And unless you're checking your credit report, checking your statements regularly, you might not even catch it. The next thing is for you to shred anything with your account numbers on. Like I said, somebody can get your credit card number easily, go online, they just type it right in. They might have your statement, so they have your address, they have your zip code. They can verify that and get approved to get merchandise sent to them directly. So you want to make sure that you're shredding anything with your account numbers on it. You want to review your credit report regularly, making sure balances and things like that are current, making sure that there are no new lines of credit, new trade lines that are being added to your credit report that you have not applied for. Even check the inquiries. I noticed a few years back there was an inquiry for an auto loan in like another state, and I was able to check it from a credit monitoring system. So you even want to check for stuff like that, because that can be signs that someone somewhere has your information. And then again, monitor your statements carefully. That includes your bank statements, your credit union statements, your auto statements, your credit cards, and just making sure that all that information is up to date. Monitoring your credit card statements is another one where maybe you even just forgot about a subscription that you signed up for, and a company is just continually, charging you. And so you think you have, $10 balance, but maybe you have like 150 or something like that. Things like that can make a difference depending on what your credit limits are. So check those things regularly. That will help you to hopefully prevent identity theft, taking all of those measures to keep your information private and secure. Next slide.
Okay, so let's say that the worst has happened and you discover you are a victim of identity theft. You show some fraud on your credit report. What do? I can speak about this from personal experience. This happened to me many years ago. I received a phone call from a collection agency trying to collect on a telephone line that somebody opened in my name, and they didn't pay the bill. There's a surprise. The bad guys didn't pay the bill. And so it went to collections. And one of the things I learned here is that if you do find some fraud on, get a good notebook, and you're going to want to write down the name of everybody you talk to, their name, their contact information, their titles, and anything that's said and anything they ask you to do, write it all down. I had a notebook this thick before I was done. The FCC was involved, all this, but here's how much damage a collection can do like this. It's not your fault. My credit score at the time was around 860, I think, and it dropped. One collection on my credit report dropped me down like 620. And it took several months to get my credit back up going through this process. So what do you do? First thing is you're going to have to file police reports. You're going to file a police report where you live. You're going to probably may have to file one where the theft took place. Let's say that the fraudster opened an account and they're in Houston, Texas. You may have to file a police report with the police in Houston, Texas. You're going to want to contact all 3 credit bureaus. Do this right away. Let them know you're a victim of identity theft. They can put a fraud alert on your credit. You can ask them to do this. They can put a fraud alert on your credit report and it will be on there for 7 years. What this means is that nobody can open new credit in your name without getting express permission from you first. So for example, you've got this fraud alert on there. It's a couple of years down the road. You need to borrow some money. So you will contact the credit bureaus and say, I'm giving permission for Bank XYZ to pull my credit and issue me new credit. And you'll have to do that with the 3 credit bureaus. Contact creditors. Let's say that you've never had a Kohl's account. You just pulled your credit report. You're looking at it and look what's on there. It's a Kohl's account and it's past due. Because remember, bad guys don't pay their bills. So now you've got a delinquent Kohl's. It's not yours. Contact Kohl's. You'll go through their fraud division and fill out all their paperwork as well as going through the police department and the credit bureaus. You want to do that with the creditors as well. Monitor all of your accounts. Even if all of your other credit cards are fine and they haven't been attacked at all, you're going to probably want to contact those institutions, let them know you are a victim of identity theft. It's not a bad idea to get new cards with different numbers and get new passwords and change all your passwords, because even though the bad guys may not have used those, they could still have it and just haven't used it yet. So you want to get new numbers. You want to review your credit quarterly. Now, we've said you could get a free copy of your credit report once a year from the credit bureaus. Unless you're a victim of fraud or identity theft, you can then get a free copy quarterly. And you'll want to do that and keep careful tabs on everything on your credit report for all the reasons that we've already stated. You're going to have to contact some other institutions as well. If somebody got a driver's license using your identity, you're going to have to go through the fraud department of DMV. If somebody got your social security number and they're using that fraudulently, you're going to have to go through the fraud department of the Social Security Administration. And also your financial institutions. If somebody's got a hold of your checking account information, of course, you want to make sure there's a stop payment placed on anything you didn't write. Good rule of thumb is to close out those numbers and get new numbers, just like you do with the credit card. Get new numbers, new passwords, new everything, if that should happen. There's a couple of other reporting agencies that you should be aware of as well, you can be aware of. And one is called Check Systems. Oh, next slide, please. And what Check Systems is a reporting agency that financial institutions use to help each other. So if you're at a bank or credit union and you bounce some checks and you left them owing them money, they're going to report you to Check Systems. You go to another financial institution and they see you're on Check Systems, they may not open a new checking account for you. The only people that can remove you from Check Systems are the ones who put you on there. So you'd have to go back to whoever reported you. By the way, you can contact Check Systems and you can say, hey, am I on there? And if I am, who reported me? And they'll tell you. And you go to whoever reported you and you'd have to work out with them, like make good on those bounced checks, or if you left them owing the money, make good on that. Then ask them to remove you from Check Systems. Here's something interesting though. They don't have to remove you from Check Systems. There's no law that says they have to do that. So let's say you had several bounced checks and you've paid them. They're good. You owe that bank no money, but you're still on Check Systems. You may have to go back to that place and say, please, would you just at least give me a letter that shows that I owe you no money, that I made good on those checks. You can then take that letter to the new financial institution and say, look, I know I'm on Check Systems, but I paid that. Those checks are paid. Here's a letter from them. And in most cases, that will help to get you a new account. Another reporting agency is called the National Tenant Network. This is used by landlords. And if you're on this list, it can seriously hamper your ability to rent a new place. So if you've been evicted, or you broke a lease early and you left owing money, or there was damage to the property and your security deposit didn't cover it, you can be reported to this national tenant network. Again, the only people that can remove it from it are the people that put you on it. So you have to go to the original source, whoever put you on there, work it out with them, whatever you have to do to pay back whatever it is, and ask them to remove you from this list. If they won't remove you, or if you had an eviction and they're not going to remove you from it, you can give a brief statement of explanation, like usually 100 words or less, and the National Tenant Network, they will add this to your file. So if a new landlord pulls this and they see there was an eviction, they will also see your side of the story, what happened, and they have to include that. All right, we're about to turn it over now for some closing thoughts to Crystal, but just before we do that, I just want to thank everybody myself for having chimed in tonight. I hope you got some really good information. And just a real brief rule of thumb for me, some guidance here, to have good credit, make your payments on time every month. There's nothing stronger than doing that every month. And live within your means as much as you can with credit cards, keeping your balances below the limit. And all right, everybody, thank you so much. And Crystal, back to you.
Yeah. So final thought, of course, what Craig said is so very important. Make your payments on time, live within your means, and check your credit report. Check your credit report at least once per year. Make sure that the information that's on the credit report is accurate. If there are inaccuracies, you can fix them on your own. I know we covered a lot of areas, but some of you may have joined tonight's session with something specific in mind. So now we're going to open it up. So if you have those questions, I don't know if Brittany, maybe you want to get us started with those. And if anybody has questions, you can put it in the chat or unmute yourself. I'm not sure how we're going to handle this.
We currently do not have any in the chat, but if you do have a question, now is the time to unmute yourself.
We had a presentation last week, and one of the questions somebody asked was how often your employer pulled your credit for in order to work there. So I will start us with that, if that helps with everybody thinking of what they want to ask. So with your employment, like Craig mentioned in the presentation, you have to sign a disclosure saying that you're okaying the company to pull your credit. But how often they do it will be up to the employer's discretion pretty much, and it should be in the disclosure. So some places, I know I've worked for a location that they didn't do any credit pulls, right? It was just like, you look good on paper, you interview well, you're hired. I've been at another location, a financial institution, where we had annual credit checks, or it was at the discretion of the manager. If the manager felt that maybe something, you just seemed a little off, they just want to check your credit and see how things are going, they could pull your credit at their discretion. One thing I would advise people that I have noticed that it is a trend for employers to somewhat often check it, whether it's annually, however that may be. Most companies will offer some kind of guidance or like a program that you can reach out if you are facing any financial difficulties. So if you do find yourself that maybe you're falling behind on your bills, and things are starting to snowball, reach out to your employer, your human resources department, whatever that may be, and see if they have those programs. Do that before it kind of gets to that final point where you can't get caught up, or even reach out to the credit union. We have resources, we have our staff that is available to kind of help you with creating a budget and things like that. We have tools on our website that's available as well. So, and I believe
also,
a question came in.
I just want to throw in on that is that if your employer pulls your credit, it does not negatively affect your credit score.
Yeah.
It doesn't count as an inquiry that affects your score on your credit. Another thing that was brought up last time on our last presentation that may be of interest to people, somebody asked about credit monitoring services and what do we think about them? And you can hire people to monitor your credit 24/7, and you can pay up to $20 a month per person or more, and they will monitor your credit. And if something happens, somebody opens a line of credit that you didn't approve, it's going to show up, and they'll let you know about it before the real damage can happen. I just want to give us a plug. Our members, and I think most of you are members here, we have bonus checking. It's $5.95 a month. It comes with a lot of great benefits, but my favorite is complete identity theft and credit monitoring 24/7. And if somebody opens a fishing license in some state somewhere, you'll know about it. Somebody commits a crime using your name and your social, you're going to know about it. Somebody opens a line of credit trying to do something bad, you're going to know about it. If you are a victim of identity theft, if somebody does commit some fraud on you, you are assigned a fraud expert. You don't have to wonder, what do I do next? Who do I call? A fraud expert walks you from the very beginning all the way through to the completion. If you have to spend any of your own money to help recoup, like if you have to fly somewhere to testify, rent a car, a hotel, that you're reimbursed up to $10,000. But this is the really cool part. This is what I love about this. This doesn't just cover you. This covers every member of your family living in your household. So if they're living in your house, it could be uncles, brothers, parents, even your minor children. They're all covered with the exact same benefits, and they don't have to be on the account. They just have to be living in your house. And keep this in mind, the bad guys would rather get your minor's social security number because they can use it typically for a lot longer before it's detected. Most times when a minor's social is compromised, it's not discovered until the child grows up and applies for their first job or applies for college tuition. Then all the damage shows up, but not here. It's caught right when it happens before any of that damage can take place. So just wanted to cover that.
Excuse me.
Oh, go ahead.
What type of checking account is that again?
It's called bonus checking. So we have a couple of checking. It's called bonus checking. Yep. And it's $5.95 a month. And I'm actually amazed it's not more, because just for the identity theft protection alone, more than pays for it. And this comes with so many other benefits, cell phone protection. You get all kinds of discounts on retail shopping, restaurants, movies, travel. I mean, go to our website. We took a 2-hour course, everything that this stuff covers. But the identity theft and the credit monitoring, that's what got me excited. And I get an email every month and it tells me no activity, which tells me nobody tried anything funny on my credit. If somebody tried something, I'm going to be notified right away.
Okay, and could I just call customer service to get my checking switched over to the bonus checking?
Absolutely, absolutely.
And there's no other fees other than just the $5.95?
No, $5.95 a month, that's it.
Wonderful, that sounds great. Thank you.
You're very welcome.
And we did get a question in the chat. They asked if there is a way to increase the length of your credit history.
Only by your oldest trade line, and it starts there. So if you're just starting out, if you have no credit and you get your first credit card, let's say you get one of our credit cards, they're awesome. You get one of our credit cards, your trade line starts the day you get that. There's no way to make that longer. It's going to start with your first trade line. So that's why I said it's so important that whatever your oldest trade line is, don't close it, and keep it active and keep it current and keep it good, so that when a creditor pulls your credit, it goes all the way back to that first trade line. And there's no other way to lengthen the history that you have in credit.
No way around that one, unfortunately.
Yeah.
Anybody
Way,
else have a question?
Thinking one, I just want to say this also. I think most of you are members, and I want to personally thank you for being a member. I love this credit union. I love our membership. I've been here 28 years, and I absolutely love it. And it's because of our members that I am able to do what I do. And I appreciate every one of you. And thank you for being a member, and thank you for showing up tonight.
Yeah, we do. Thank you.
Thank you. This has been most informative. I really appreciate you and look forward to more.
Wonderful.
We look forward to doing them.
Everyone have a great night.
You as well.
All right,
Thank you.
Gone. Any other questions before we end it?
Bye-bye.
Have a wonderful evening, everybody.
Yeah, we'll have those presentations sent out to you tomorrow.
Alrighty, thank you guys so much. Have a great night.